What's up, everybody? Welcome to today's episode of the Daily Dose. Today is Tuesday, August 30th. And we kept seeing the continuation of a sell-off, kind of erasing the bull rally we saw after the June lows. And the S&P 500 was down a little more than 1%. Again, the Dow was down 1%, and the NASDAQ was down 1.1%. So year-to-date, these are our numbers. 24% down on the NASDAQ, 16% down on the S&P, 12% down on the Dow, and we're kind of heading back towards these June lows, which would make sense since this was mainly fueled by people thinking that the Fed was maybe going to pivot. And I saw this really interesting clip. It was someone posted it on Twitter, and they were interviewing someone on CNBC and asking her what she thought was fueling the rally that we saw from these bottoms in June. And she said, well, I think there was a lot of shorts covering over this time, and that was fueling the bull rally. And they just immediately cut her off and moved on to something else. A lot of people were pointing at that, saying that CNBC doesn't want to have basically that truth being shared on air. So that was kind of interesting. But these news articles and stuff, they'll make up just stories because they have to every day of why the market moves from a day-to-day basis. But really the reality of the situation is that demand is decreasing, that the Fed is tightening the economy, that any hopes that the Fed was going to pivot or ease up a little bit got wiped out last week. And we're just heading lower in the stock market. Obviously, we still have a lot of concerns in Europe with energy prices and demand there. So we're definitely not out of the woods. Obviously, tensions with Taiwan are increasing, and China. So there's a lot going on that's negatively affecting the economy. The housing market is starting to fall a little bit. So we're definitely not anywhere close to being out of the woods. But here's the stock market. So we said after Friday that we would expect the market's next level to hit this zone right here, and they hit it today and kind of bounced off and closed right at the top of the zone. So we closed at 39.86, and we had this zone from 39.83 to 39.15. The market got as low as 39.64 today and then bounced back up. So we knew that there would be a little bit of buying pressure here, but I don't see the market really rallying from this point. I would expect kind of the lows to be hit next. And, I think it would be a good idea for us maybe to kind of draw a good level here now that that's our next level after this one. So let's do that right now. So let's draw a zone that we think would be good for this level. Obviously, like right here. But let's bring it all the way back. Let's bring it all the way back and see if we can find some synergies with a past market. Let's bring it all the way back. Okay. So I think this looks like a good zone. So let's bring it back and see if that makes sense for our market today. And I think it does. So let's keep that going out here. Let's continue our trend line out. I just want to make sure that we keep these zones consistent. So let's draw them out. Right there. And right there. Okay, cool. So these are our levels we have in the market. Let's take a look at Bitcoin. So Bitcoin's still in the middle of no man's land in between these two ranges. It's cracked below the 20,000 for now. Obviously, we've talked a lot about this 17.7 level. If it breaks below 17.7, we could really be headed back down to 11,000. So that's a huge level that we'll be keeping an eye on. But other than that, not a lot to report, I guess. Obviously, maybe we see some buying pressure, maybe, but this market's pretty negative right now. So, I mean, it would make sense for us to at least get back to these lows now that really what was fueling this rally has been wiped out. So that's what I'll be taking a look at. But thank you for joining me today. Obviously, if you enjoy this type of content, every day we release a short video like this. Every weekend we release a longer video that goes deeper into some analysis and commentary. So if you enjoy that, if you like that, be sure to subscribe to the YouTube channel or follow us wherever you listen to podcasts. And as always, thank you for listening.